Canadian government did. They went and they froze all the bank accounts of all the truckers. So imagine having your bank, all of those challenges, etc. Your money gets frozen because the government can do that, and they did that. The truckers started transacting in Bitcoin, and the Canadian government made a very big error.
Isn't that the biggest risk of this cryptocurrency? A government one day wakes up and says, "I will not allow the trade of this currency."
No, because that ban will essentially be it won't be an enforceable thing. It won't be something that will actually on ground be enforced. Because you say what you want, at the end of the day, the transactions will continue to happen. Why will somebody buy this fake dollar? Because we've created use cases for them now. Whenever we speak to investors, we say don't go beyond, say, 5% of your portfolio, 1%, 2%, 5%. Start small and try.
Okay, so very interesting numbers. Like people are struggling, to make people buy equity or mutual fund for so many years. But you can correct me. I think there are 12 crore people investing in cryptocurrency. And my understanding is, though I have some background of traditional finance, and I understand and I can relate from that. People don't understand traditional finance. It's so much more difficult for them to understand crypto. Yet so many people are driving, or I feel that it's because they have this belief that it will give them, much higher returns, right? So let's understand this. Couple of things. One is, what is it that generate returns in, like, so in traditional finance, I understand gold is supply chain. For equity, there is an underlying business, that there is a direct obligation with the person who's given me the money, right?
Correct.
So what is it like driving the pricing of crypto?
Sure. So, see, we've spoken a great deal about what this technology did and how it sort of revolutionized one simple thing of digital value. Okay, transacting in digital means. I'll give you some very interesting trends and developments that are happening. AI is coming up in a big way. Okay, you must have already heard of AI agentic payments.
Yes.
Okay, these are payments that are all happening. AI is what? It's a digital primitive. Everything is digital. It's now parsing digital data. We are trying to. So there was, when the internet happened, there was this race of, oh, let's take all the books and put them online. Let's take all the information and digitize it. Let's take everything that we have. Now we've moved past that. Now we are actually digitizing your and my intelligence. We're digitizing our experiences. We're digitizing our thought processes. So we've got into that state. We've got into a state where there are AI agentic payments. Tell me, which system will be more suited for a future where AI is making some agentic payments, assuming it's all happening in the best interests, the safest way, etc. A natively digital system, money system, or a system which relies on different silos and different databases, and which is sort of broken.
It will be digital,
It
right?
has to be a natively digital system, right? So that is one. A future thought process or a future prospect. I mean, today, what is the need to go to Mars? But why did everyone go behind investing in the SpaceX IPO? Why was there such a big brouhaha? So that is one very important factor. What's going to happen in the future? Where is the trend and where is the shift, and what technologies are going to be leveraged the most in the future? So, number one, this whole digital asset space falls, squarely in that conversation. It is going to be the native format. Why do you see nations across the world trying to build CBDCs? CBDCs are nothing but if I may call it, they're the sovereign versions, Bitcoin, wrapped into a sovereign kind of a play. They're essentially what Bitcoin has achieved. Same tech, same stacks, same infra, more or less, and then they're trying to replicate that in a controlled environment, right? So, and all of these began after the advent of Bitcoin. Okay, so here is the tech that everyone agrees is actually solid tech. There has been a lot of people who have bought in, And there is a future for this in terms of a use case. We have only discussed Bitcoin so far. The moment you get into other tokens like Ethereum, Solana, etc., a lot of those come with their own features and their own characteristics, which take care of very interesting use cases in finance, and uh, therefore those use cases. One of the use cases, for example, is stable coins.
Hmm.
Okay, it's essentially taking your government securities or your treasury bills, etc., tokenizing them and issuing these tokens, and making sure that your securities are essentially pledged 1:1 to this token. That's a stable coin.
Explain it.
So if I were to, let's say, go to RBI and get some T-bills, or let me not take the RBI example, let's take the US example, which is actually happening. You can today go and you can buy these government securities from the US government. Okay, these securities, these are bonds. They come to you with a 4% coupon kind of a thing. You get interest on these bonds. Okay, you hold these bonds. Government gets liquidity, and they are giving you a promise that they will pay you back in 10 years, 20 years, whatever time. So if I invest in 1 lakh rupees worth of these US government bonds, I can issue 1 lakh rupees worth of dollars, how much ever that is. Okay. Now this dollar essentially will be backed 1:1 to, let's say, if I have purchased $1 lakh worth of GSEX, then I can issue $1 lakh in tokenized format, and then I can create a business out of it.
Through stablecoin, you're saying?
This is a stable.
So it's like I bought government securities of $1 lakh, equivalent amount of stable coins I can issue.
1:1 mapping. Now I am earning 4% on that yield. Okay. Why will somebody buy this fake dollar? Because we've created use cases for them now. Payment use cases, lending, borrowing, trading, all sorts of things. The moment you have this digital dollar against a dollar that was sitting in your bank account, this is far more mobile. This can move to DeFi. This can go into buying tokenized securities. It can go into today, right now. You could not have bought the SpaceX IPO, but you could have bought a tokenized version of the SpaceX IPO through these stable coins.
So, let's understand this. So I have $1 lakh of government securities. Now I issued coins, and let's say I transfer it for whatever amount. I can transfer it.
It's yours. Now, when will you give it to a end customer? The customer will give you $5. You will give him $5 worth of tokens. Customer will give you $100. So like that, you will distribute this. Now everyone has stable coins in different denominations. They will take those stable coins. They will go to an exchange. Okay, and then they will buy, let's say, Bitcoin. Now Bitcoin price goes up. They will sell, come back into stable coins. They started at 100 stable coins. Now there are 110 stable coins. They came back, they gave you the 100 stable coins back. They kept their 10 stable coins, and they said, boss, give me my $100 back. Now they've got $100 plus that $10 worth of stable coins.
So how many of such, like, so we know Bitcoin, people must have heard of Ethereum.
Yeah, so Ethereum,
like there, how many such?
So there are thousands.
Okay, and what are these category? I mean, Bitcoin is a cryptocurrency. Ethereum is also a cryptocurrency.
Yeah, so today we call all of them digital assets because, like we discussed, their payment use case did not really fly because of the confirmation time.
Because time it takes.
Yeah, so the currency word has now gone to stable coins.
Okay.
Because stable coins can be immediately transferred, and I can pay in stable coins instant confirmation.
But it's not in India. It's not, or if there is a use case in India.
So in India, one cannot use this as a medium of exchange or as a mode of payment at all. That is strict no. Because the Indian rupee is the sovereign currency of our country. Only the Indian rupee can be used.
Okay.
So in that way, you can't even use gold, for example. There could be people who may be using it as a transaction mechanism. I've heard of gold payments for buying real estate also. But those are all illicit ways to do it. So you could be using anything. You could be doing barter also. But in India, it is basically looked down upon. You cannot. It's a sort of.
So how do people decide like which crypto to buy because or
So
invest, because uh, again there is no data available to any of it, right? There is no historical data of how it will perform, right? Or there is. So what I'm trying to understand is, okay, fine, there is a great technology,
it has a future.
it has a future, decentralized,
Yeah.
all that is fine. I don't understand two things. One is, how do I take care of the risk associated with this currency,
Hmm.
and what is driving the price? So between Ethereum or Bitcoin and other 1,000 coins which are there, how do I decide which one to buy? Because I know Bitcoin and Ethereum, should I buy Bitcoin and Ethereum, or how do I do the analysis of what is right for me? Because ultimately at the end of the day, the purpose of investment is at least my principal should be protected, and then I should gain some, right?
Correct.
So how do I do that analysis?
Correct. So let's look at this again through some fundamental lenses. Okay. So if you sort of if you try to look at all the possible tokens, they will all fall under the two broad extremes of public and private. Okay. And again, if you sort of make this into a 4x4 matrix, then there's permissionless and permission. Okay. So public cryptocurrencies and permissionless cryptocurrencies, public and permission, and then private, permission, private and permissionless. What this means is that you remember the three things that we spoke about, the nodes and the blockchain and all of that. Who is the node? The node is the one who's keeping account of the ledger. Okay. If you control the nodes, you can create a permissioned blockchain. Today, Bitcoin is the only truly decentralized blockchain ecosystem in which you have a Bitcoin core software, you have the Bitcoin token, and you have all the Bitcoin wallets, etc. You have everything happening. It's the only one which is truly decentralized, which means it is fully public and fully permissionless. Okay, no other sort of token ecosystem comes close. I think the second next is Ethereum, which is to a large degree it is decentralized, and it is also to a large degree permissionless, but nothing comes close to Bitcoin. Okay. Now these are systems, please understand, these are blockchain systems which are design systems, very similar to any other design system that you may have. Okay. And with every design system there is always constraints. In the blockchain world, there is a constraint, a well-known constraint mechanism called the Blockchain Trilemma. Okay, which says that there are these 3 points. You can have speed and scalability. You can have centralization versus decentralization, and you can have security. Basically, you can have how much. I think it's speed, decentralization, and security. Right. So Bitcoin essentially is the slowest of all of them. It takes 10 minutes for a confirmation, but it's absolutely 100% decentralized, and it's 100% secure. Okay, in terms of security, by virtue of it being slow and clunky and only doing these 4 things, not having a lot of features, etc., it scores very low on speed and scalability. It can only do 7 transactions per second. For context, Visa does I think 20,000 TPS or even more than that. Right. So today's world is running at 20,000 plus TPS. Here is a new payment mechanism that does 7 TPS. So you see the difference. Okay. But what it does really well, which is therefore it has become a store of value, digital value. The only digital file that can actually immutably exist on the internet in the digital world and can be transferred with instant settlement guaranteed, and no no bias or no third party intervention, no country intervention, fully neutral, fully impartial. Okay, running on pure math and code. That's Bitcoin, one extreme. The other extremes, Ethereum is probably a little permissioned, because you can't just create a node, you need to have 32 Ethereum, and you need to stake them in order to become a Ethereum node. So that puts a barrier, right? So some sort of permissioning. Then you come to a CBDC, where if you want to be a node, you have to be a bank, part of the government system. Okay, it's absolutely permissioned. The token that are created are also fully permissioned, and it's private. Okay, so that's the way the spectrum works. Now all the blockchains that you can think of, all the tokens that you hear about, CeLo, Ethereum, there's Link, there's thousands and thousands of them. Okay, Solana, Polygon, bunch of them. All of them, if you look at them through this lens, you will look at is it decentralized or centralized? Because if it's centralized, there can be some actors who can come in, and then they can take certain calls, which can essentially be a problem.
It has to be decentralized.
Not necessarily. Even if it's centralized, then is it centralized for a purpose? And then who's the person centralizing it? If it's CBDC, you would have a lot more confidence because RBI is centralizing it, right? Now there will be people who will say, oh no, RBI can also be spying, and there's a privacy challenge there. That's a different discussion. But you see who are the people, what are the incentives behind doing it. RBI is a very strong national incentive there. So that's centralized. Then you see, security wise, okay, in terms of uptime, how much does the blockchain fail often? Can the records be changed? Can they be altered, etc.? In some blockchains that can be done. Okay, so you look at that angle, and then you look at speed and scalability. There are some who very openly will compromise on this decentralization. They will compromise on security a little bit. They'll pull the thing towards speed and scalability, but they are offering you speed and scalability. Their core purpose is that I'm helping you, let's say, make micro payment transactions. $10, $2, $5, piece cent, 50 cent. I'm giving you a lot of that. So there, you don't mind. You want the speed and scalability. It's okay if it's not fully decentralized. It's okay if it's not so secure. I may lose, say, a few, little amount. I'm not going to lose my life over this. So then those blockchains are probably very good for those use cases. And then you see the intent of the creators, and you see who has put together that design and what is it achieving. And then you sort of get into it. There are blockchain systems that are creating decentralized oracles. Okay, because in the digital world, one of the most critical components are digital feeds of data. Okay, now data can also be corrupt. If it's a digital code which is going to transact basis some data that I give, okay, and it's going to do it immutably, I can poison the data there, and I can change the outcome in my favor. So they've created decentralized data systems or data feeds. Okay, so there's a company called Chainlink who's been working for a very long time in this. I'm not sure of how centralized they are, but they seem to be the best, global standard on these data feeds. So those data feeds can now be plugged into your contracts, the smart contracts, and then those contracts can get executed on the blockchains. So that's how you would look at it. You would look at it between these paradigms of private, public, and then permissionless. You would look at them in terms of what is the use case that they're solving. Solana, for example, was extremely fast, high speed, high scalability. But in the beginning, while it was developing, it used to fail. The blockchain would just suddenly stop. You can't have that if you're relying on a robust system. It has to be fully robust. So today, they've really taken care of that.
This worries me. Say blockchain fails, right?
Yeah.
I mean, since it is open source technology, no government or regulator.
No. So Solana, for example, then has a bunch of nodes and validators. It's not fully decentralized. There's a bunch of people involved, and these are responsible people. So they've actually gone ahead and made the corrections. They've improved the chain, and it's also a bit open source. So it's not like the code is not. It's peer reviewed. People can look at it, and there are. So it's semi decentralized to say. But they've also worked hard. Now, in that case, you look at who are the people fronting that project, who are the people behind it, and the good folks behind Solana, they've done a fairly good job of remediating those challenges. Yeah.
So, as an investor, I have two more questions about this cryptocurrency. One is, how does the price movement happen, right? Like, for example, for now, you can correct me. I think Bitcoin is fallen
So about
30.
61 lakhs. Yeah.
So, I mean, it's dropping, and why is it dropping? When will it come back? Like, no one can predict anything, but I can talk about why current Indian capital market or equity markets are not doing so great, and why will they do
What
great.
would be the top 2 reasons in your mind for the Indian equity markets?
I mean, there was so much. There was war. There was, tariff pricing. There was dollar pricing.
The dollar,
I
right?
know.
So now this, so see, in the digital asset world, you're talking about a global asset.
Hmm.
This asset gets impacted by any macroeconomic development happening across the world. China wants to ban Bitcoin. We've probably heard that news many times. China wants to ban Bitcoin. Current state is also very unclear whether China is banned or not. They are definitely creating a Hong Kong, which is a hub for digital assets. And
But they are banning.
they've already started. They've given licenses to, I think, 2 banks to start issuing stable coins. And they've created a good set of rules around how these stable coins will get issued, etc. So through Hong Kong. Okay, now, and here in the mainland, they probably continue
But
to.
isn't that the biggest risk of this cryptocurrency? A government one day wakes up and says, "I will not allow the trade of this currency in this country."
No, because that ban will essentially be it won't be an enforceable thing. It won't be something that will actually on ground be enforced. Because you say what you want, at the end of the day, the transactions will continue to happen. There is no way for any government to really come and sort of ban this, because it's a mass movement. It's a it's power in the hands of the end users. The end users can decide how they.
So you can transact these coins or these tokens, right? But I need that money in the currency terms, right? Like,
If you need the money in the currency terms, yes.
then it could be a challenge, right?
Then it is definitely a challenge, and that's where you can really restrict its usage and its but I'll give you an example of this incident that happened in Canada. There was a truckers protest. Okay, and what the Canadian government did, they went and they froze all the bank accounts of all the truckers. So imagine having your bank account frozen, your money, but you not being able to access it in under whatever circumstance, in whatever country, in whatever reasons behind it, etc. But you're an average trucker who earns his or her money through hard work, going through all of those challenges, etc. Your money gets frozen because the government can do that, and they did that. The truckers started transacting in Bitcoin, and the Canadian government made a very big error. They issued these notices to the wallet companies, right? And the wallet companies then wrote back in amazing language, very colorful language, to the government of Canada, saying, "Dude, you guys don't understand anything. We don't control this. The private keys are with them. We don't even know who they are. We've simply provided a UI as a software. In our absence, they could have gone ahead and done it through any other wallet, etc. But you really need to look up on what decentralized is and how these things work, etc." So the truckers were able to manage the important things, fuel, etc. They all came together as a community. Now, is this good? Is this bad? Can this be used in good ways? Can this be used in bad ways? These conversations are extremely difficult to have. They're transcending politics, morality, freedom of humanities, a lot of those things, right? So let's not go into that conversation, but somewhere you need to have a sort of balance. You need to have some checking mechanism, and in many ways Bitcoin is that mechanism that has been brought into the world, and we've seen that happen. So coming back to your question, how does the price movement happen? Macroeconomic wars make an impact. Okay? In this war, we saw Iran.
So why will it affect? It's decentralized software.
So think about it this way. What are we talking about? We're talking about the dollar value or the INR value of a Bitcoin.
Okay.
So the moment more dollars come into Bitcoin, its value will increase. The moment dollars are pulled out of Bitcoin and put into something else, its value will decrease, it will shrink. So if you look at it in pure Bitcoin terms, if I look at my portfolio in Bitcoin terms, it has remained whatever. If I had 10 Bitcoin, it's still 10 Bitcoin. Tomorrow it's going to be again 10 Bitcoin. It's not going to change. That doesn't fluctuate in Bitcoin terms. What fluctuates is the INR value or the dollar value of that asset, right? So it's like gold. You have 10 grams of gold. You have that gold with you, and you have it with you in perpetuity. Nobody can take that away from you. Markets will keep changing prices.
What else other than currency?
So other than these macroeconomic, there are local markets. Today in India, USDT has seen a demand, like a supply crunch because of a lot of interventions. So the USDT price is increased, and then there is a premium on USDT. And similarly, there are a lot of small things. When a good news comes, a regulator is now looking to regulate Bitcoin. So US actually came up with two acts, the Clarity Act and the Genius Act, and that really changed the pricing for Bitcoin. Last year's price action for Bitcoin really came on the back of the Bitcoin ETFs. It was last year only or the year before last. So I think 24, if I'm not wrong. Bitcoin ETFs, they were brought into the picture, hugely oversubscribed. People are not directly buying Bitcoins, but through the traditional ecosystem, they're buying ETFs, which are investing in Bitcoin. That became the biggest, ETF in the history of US ETFs. It surpassed the gold ETFs also in a very short span of time. So that just shows that, and it's basic principle. As an investor, as a very smart investor, you don't want to lose out on that opportunity, which could be a wild upswing for you. So you don't go all out. That's gambling. But at least a small allocation you want to do. You want to hedge your bets. You want to diversify a little bit. You have a lot of yours in safe assets which give you small yields, but some of it long tail. You will go into, and that's what we also speak to whenever we speak to investors. We say don't go beyond say 5% of your portfolio, 1%, 2%, 5%. Start small and try and then sort of enter the market. So again, these kind of large institutional plays, ETF, then large companies acquiring a lot of Bitcoin on their balance sheets, banks like JP Morgan, Wells Fargo getting into stable coins, a lot of Visa, Mastercard looking at how stablecoin payments can be made. These are large companies across the world. They're big players in remittances. They're billion-dollar, multi-billion dollar
remittances is happening through these currencies.
Swift has Swift, which is the interbank. They've started doing stable coins. I think they recently made a public announcement about some stable coin thing that they were doing. And they've also been actively looking at it because it just makes sense. You have this decentralized rail that is already in place, which is neither Russia's, neither China's, neither whoever else's. It's decentralized. And you just simply send a transfer in real time, it's being transferred, your value is going from one country to the other. Why would you go through a painful way and then pay fees and then take 2 days to get your remittances done? Does not make sense.
So which country, which retail investor kind of use case is there, which is
US payments, lending, borrowing.
They're doing lending, borrowing in this
100%. It's the so imagine you have a real estate asset, you have a flat. You want to get some liquidity against it. Just think of all the paperwork and all the conversations and all the meetings and all the time it will take for you to, and the surveys and the analysis. They'll go and do valuations, they'll go and check this, that and the other, and then how much of the value of your asset will they actually give you, and now you have the liquidity, and you can then use it for whatever business purpose or whatever you want it to have, right? As opposed to that, today you have one Bitcoin. Simply log into this DeFi protocol, you convert it into an Ethereum, a wrapped layer of Bitcoin basically, uh, and you put it into the DeFi, lock it there. Against that, you instantly get these stable coins or these other tokens. Now you can go and use those tokens freely. The moment the Bitcoin price, goes, or the risk thresholds are met, they will liquidate your Bitcoin.
Oh.
Or if they do not meet, if they are not sort of beyond the risk thresholds, you can come back. Whatever excess money you made, you keep that with you, and you just put whatever amount you had to with the interest. Your Bitcoin comes back to you. All of this is done through code, through smart contracts, which are again on the blockchain, which are open. The code can be scrutinized, it can be seen. Everyone's looking at those codes, and you're actually doing this transaction in this decentralized cloud.
This is all happening in US. What about
No, it's happening globally. It's happening in India as
what
well.
about India as well?
100%.
So
India is one of the highest adopters of VDAs.
Mhm.
And there's a bunch of folks who are very intelligent, who understand all of these things, who've gotten into this. So Polygon, which is a blockchain, design, it is built by Indian creators. It's become one of the top chains in the world, and companies across the world are building on Polygon. So India is in on the ground. The adoption, the embracing of this technology, the development of this technology, the furtherance of this technology. Indians are. Solana has a Indian co-founder. So many Indians across this ecosystem. Coinbase CTO, the the ex CTO was there at the key time of Coinbase. Balaji Srinivasan, he's an Indian. He's doing a bunch of things in this space. So there's a lot of Indian great minds working on this for a very long time now.
So Manhar, I mean, I come from traditional finance, and everything that gets sold in India has a regulation. It's regulated, and it's an interesting technology. There is a future to it. How do you think, like in India, the regulation will be around this, and how do you see the future? And let's conclude this podcast from that.
Sure. So one of the biggest factors in this business today, in the mainstreaming of this business today, is regulation. And while we don't have a fully developed regulatory framework in India, we have what I call regulatory interventions. Okay, so there's taxation, amazing set of rules, although they are not very favorable for the industry. But in terms of a law, it's very well thought out, and we as industry, we work very closely with the CBDT, and we help them cover a lot of loopholes. The industry in India works very closely, by the way, with pretty much all the regulators. So the taxation is what we got with certain, and with the cybersecurity framework. There's a bunch of work that has happened there with FIU, with FATF, with on AML, CFT regulations, and what kind of initiatives can be taken on that front. There's a lot of work that happens there. Then there is the Advertising Standards Council of India. The industry has worked with them as well to create a set of guidelines around how these disclaimers should be put, similar to your mutual fund industry, etc. So that also has been done. And there's a bunch of other smaller things. There's today under the ages of there's an association called the Bharat Web3 Association. Under the ages of that association, a self-regulatory organization is currently being developed, where the industry sort of works together. So that's what the regulatory discussions are at right now. Fragmented interventions have happened. No holistic framework per se. No regulator has sort of been identified, although it could be RBI or SEBI. One of those coming in, or both of those coming in various capacities. As this will develop, what we basically look at when we see India is that it's a huge market with a lot of potential. There's already a lot of adoption of digital assets, and there's a lot of, I would think, a lot of good players. The likes of Coinbase have come into India today, so we are well past that time where there used to be a lot of frauds and scams, etc. Of course, they will continue to happen as we continue to evolve, but they just keep going smaller in size. People get more aware, etc. These regulatory interventions have also happened. We are, for example, we're the only custodian to be FIU registered in the country. Okay, so custody has also entered the chat, as they say, which means that we are going in the right direction. Eventually, once we have a unified regulator, once all of these interventions are all put together, once we have a lot of rules around who are the people who can actually enter into the space, who can actually do a business, and then what all is required for doing this business. A lot of that we've already achieved, by the way. Today, it's not easy to get a FIU registration. It takes a lot of effort and investments, and you need to have a really solid background before you become a FIU registered provider in the country. So I think the way we see it is that this will continue. We will see more emphasis on custody segregation. We will see more emphasis on exchanges role and creating that role. Then the broker relationships, all of those we will see. And for us at Liminal, India is also that fantastic opportunity, because a lot of brilliant minds in this space continue to come from India. So our R&D team is based out of India. They're creating cutting-edge softwares. They're creating these wallet systems which are going to be used by banks in Taiwan, for example. Okay, banks, which means banks are also getting into the VDA space. We don't see that happening in the India context as a conversation for obvious reasons. But as more and more clarity around regulations will emerge in India, we will see a day where we will have some of the largest institutions in the country also building on these rails. So we're building towards that future at Liminal Custody, and we're very certain that this is how it will pan out. Slowly and steadily, India will also have a regulatory framework which will address consumer protection requirements, which will address all the other requirements around risk management, and ensure that this is as safe an ecosystem. To a large degree, it has also today become very safe, thanks to the efforts from all the players. But having that oversight will essentially just make it even more robust for the end consumer, and that's the future we're sort of looking at.
Thanks, Manhar. I mean, it's a deep technology. There's a lot to consume. But thank you very much for your time here, and probably we'll explore more in future.
100%. Thank you so much,
Thank you.
Bharat. I hope this was useful.
Yes, it
in some
was.
ways. Yeah.
Yes, thank you.
All right.